Hi, and welcome to Market Conversations. Just want to do a quick video on Alibaba. So it closed at 122 on Friday, and it is currently down to 116.75 pre-market. Look at this big red candle here this morning. Is anyone surprised that Alibaba is currently down? Well, I'm not. I have Alibaba shares, and it's been a nightmare because Alibaba has not gone anywhere but down. And let's just take a quick look at a yearly chart. The stock hit a high of 274.29, and ever since then, it's just been slowly declining, hitting a low of 108. So we did bounce from that support many times already in the past. So there was news that came out, and it says Alibaba SEC filing may signal Softbank plans to sell. Alibaba registered 1 billion American depository shares that hasn't been registered before, suggesting Softbank Corporation may intend to sell some of its shares. So it hasn't been confirmed yet. Since Japan's Softbank backed Alibaba before its initial public offering, so a large portion of its holding in the company are not registered as ADSs. Citigroup analysts, including Alicia Yap, wrote in a note, Softbank owns 5.39 billion ordinary shares of Alibaba, equivalent to 673.76 million ADSs, or a 24.8% an article on Seeking Alpha, and it says Alibaba, the 1 billion share registration isn't dilution. So let's go ahead and take a look at this. It says Alibaba just filed a F6EF, registering a further 1 billion ADRs. Given that Alibaba shares outstanding is around 21.9 billion shares, one could be excused to think that massive dilution was incoming. That is not the case. Instead, there's another explanation for this F6EF. Let's see what registering 1 billion further ADRs actually mean. Alibaba shares traded on the Nasdaq are ADRs, American Depository Receipts. What an ADR actually represents is not a direct ownership of the underlying company. Instead, it's a receipt for an ADS, which actually then gives ownership rights over shares of that underlying company deposited with a given ADR depository. In the case of Alibaba, Citigroup. Also in the case of Alibaba, each Baba ADR represents 8 underlying Alibaba shares. At any time, an investor can turn to Citigroup and ask for the underlying shares which his or her ADRs represents. Or if an investor holds the underlying shares in the company, the investor can turn to Citigroup and ask to deposit those shares and receive newly issued ADRs from Citigroup. Now, what does the F6, or in case of Alibaba, the F6EF form serve? Its objective is to register more ADRs, that is to allow for the possibility of more ADRs being issued. But note what it is not for. It's not to create the possibility of issuing more common stock. When going through the SEC's general instructions for this form, here's the relevant passage. I'll go ahead and leave the link to the article in the description below. So the conclusion is that this F6EF does not represent dilution. Also, there doesn't seem to be any indication that the additional ADRs that might be created will in any way represent additional Alibaba selling. Instead, we're likely just seeing an administrative requirement being fulfilled with likely no market impact. Finally, the only difference between an F6 form and an F6EF form is that the F6EF form is effective automatically without the need for a review. So we're just going to have to see where Alibaba opens up tomorrow and where it's going to trade. Also, they do have earnings coming up, so the stock is going to be extremely volatile. So be very cautious when you're buying puts or calls.